Welcome to How Do They Afford That, the podcast that peeks into the financial lives of everyday Australians. I'm Michael Thompson. I'm a writer and the co-host of the podcast Fear and Greed Business News. As always, I'm with Canna Campbell, financial planner and founder of Sugar Mama TV, the financial literacy platform covering YouTube and podcasts like this one, obviously, and books and Instagram, Threads, TikTok and more. Hello, Canna.
Hello, Michael.
Today, Canna, this episode is really one for the property investors, isn't it?
And it's one that I've been wanting to talk about for a while, because I want to come from personal experience as well.
Yeah. It's not even actually just for people who are already property investors. It is for people considering investing in property.
But not just property investors, people who buy property to live in as well.
Yeah, that's a good point, particularly when I feel as though I'm at risk of just kind of sidetracking ourselves entirely. Let me finish describing what we're going to talk about today. It is about, you hear about kind of people that just buy property and it's all kind of, everything is fine, right?
And how much money they've made. And
I'm a sucker for clickbait. Like, I will click on any article that I see online that says, I bought 49 properties by the age of 23 or something like that. I'm like, okay. Smashing that link, just trying to find out how they did it. And it's all kind of upside. It's all positive, right? They kind of make it sound as though it kind of just pays for itself. There is no hassle. But, and it's a big but. And we don't want to be kind of too much of a Debbie Downer on this one, right? But we are going to look at some of the pitfalls of property investing.
It's
and property
eyes
ownership.
wide open here.
Yeah.
Take those rose-tinted glasses off.
That's actually a really good way to look. It is with eyes wide open, because if you are going into property investing, you need to do it aware of certainly the benefits, but also some of the risks and some of the things that you could encounter along the way. So the first one, Canna, is a big one, the first pitfall. And it doesn't just relate to property investors, as we kind of mentioned before. This is for anyone who owns a unit, for instance, or any property that comes under a strata title scheme. Tell me about special levies. What are they? Kind of why do we need to know about them? And why is this such a personal issue for you? Because I know that this comes from a place of great pain.
Massive pain. So special strata levies, they are, for most people's unexpected costs that the property owners in the strata scheme may have to pay when the owner's corporation doesn't have enough money in the sinking fund. And this is normally to help raise funds to help pay for major repairs or even upgrades. And they can be significant. And sometimes it's tens of thousands of dollars, or in our case, hundreds of thousands of dollars, or even millions of dollars. And they are non-negotiable. So you can't say, well, I refuse to pay that, or I'm only going to pay half of that. You get issued with your allocation and you have to pay that full amount. And sometimes, I had a situation where, when I was a single mother, I got hit with a $23,000 special strata levy with 3 weeks notice because something had happened to the roof of the apartment block and it needed to be fixed as a priority.
Oh, wow. And often it's related to water damage, all these kinds of things. And there's been a lot of issues lately over the last few years where there's been buildings perhaps with cracks in them, things like that, where structural problems, and often it comes back to the owner's corporation and the strata scheme needing to find the money to do it. And if it's not there in the sinking fund, if it's not there kind of in the savings essentially for the scheme, then that is when owners are going to have to put their hands in their pockets.
Exactly. And that's what Tom and I went through, and it was all due to water damage.
So what happened there? What kind of, tell us the story.
It was huge. No.
Yeah.
I'll be quick. But to cut a long story short, for 8 years, Tom and I had been complaining about water damage. There had been two situations where the water damage was so bad when it came to a storm. I had SES out twice.
This is an apartment?
Apartment.
Okay.
We complained year after year after year saying this has got to be fixed. There's a hole in the roof. It's causing all this damage. They ignored us for 8 years. If there's any lawyers listening, please let me know. Feel free to reach out to me. So they ignored us for 8 years. 8 years of mold and rot in the roof of the apartment. Ooh. It wasn't until 8 years of damage festering, and then obviously we had El Nino. Was it El Nino? Yeah, over the last couple of years, about 3 years ago. Then those problems then trickled down into the other apartment blocks. So then they started jumping up and down.
The heavy rain ones. I think that's La Nina.
La Nina. Sorry, I skipped those two mixed up.
El Nino is the dry one.
Sorry, my poor geography.
No, that's fine. That's fine. Go back to high school. Did you learn it in year 10?
Something like that, yeah.
Yeah, and that's like the only kind of Spanish words I know, and it's just because of the weather. Go on.
Well, anyway, it caused huge damage, and then it caused a huge legal issue because the special strata levy was huge, like in the millions of dollars. So we had to wear the bulk of it, like a huge chunk. That's why I say hundreds of thousands of dollars.
Wow, because it is based on kind of the size of your apartment in terms of the number of kind of square meters and things that you actually own within the building, isn't it? That's how they calculate it.
Exactly, and we own some of the space. So they basically had to deconstruct a level and rebuild it in its entirety. And it was a very difficult body corporate to work with. We had to have not only did we have to pay this huge special strata levy, which is still going, by the way, we also had to have a lawyer involved because it became so complicated. We needed to make sure that we protected our rights and we were, paying what was fair and reasonable. So it became really challenging and extremely stressful. And it's something we flagged over and over again multiple times previously.
So special levies, these kinds of things can happen to basically anyone who owns a property that is part of a strata scheme. Yeah. And so you're already paying levies, you're already paying your strata fees, and you are paying those typically quarterly.
Yes.
But how do you prepare for a special levy? If you are a property investor or if you're living in one of these properties, should you be budgeting for one, or is that kind of one of the rainy day kind of expenses that you might say, all right, I don't need to be specifically saving for this, but maybe I will allocate some money within my emergency fund?
Emergency money, definitely. This was where these funds would come from, but obviously not everyone has access to large amounts of money necessarily if it's a big strata levy. Obviously, you need to be very careful as to what is the health of the sinking fund. So knowing, looking at the strata reports before you purchase, or making sure you keep in contact with everyone who's part of the body corporate to make sure that there is always sufficient funds in the strata, and also making sure that there's good maintenance. Mm-hmm. I walk around where we live, and now there are so many buildings around me just covered in scaffoldings.
Right.
And, a lot of water damage is things like where maintenance hasn't been done. Pipes have been clogged and blocked because they haven't had the leaves cleaned out. That was one of our issues with our home. So, you need to make sure that special strata is there to help protect for when big things need to happen, but also what responsibility and proactive management has happened along the way. So to answer your question, it's normally taken out of emergency money, and that's why you should have some emergency money, because this is a realistic cost. But also there are situations for people that don't have that set aside, which was the case for us because it was such a huge amount of money.
Yeah.
And that's where, the value of having a really good mortgage broker who literally went to our bank on our behalf and said, look, this is the situation, this is the special strata levy, this is the amount they've been allocated with. And the thing I will point out, and this is why I want to talk from my personal experience, we had previously tried to sell that apartment, and we even agreed to pay for the special strata levy. And we didn't actually know what that was going to be, what that amount was. But we said in the contract, we will pay, if whoever buys this apartment, we will fund that ourselves. So you don't need to worry about this. If you want to go and sell something that's got a large strata levy attached, and I'm starting to get a bit tongue-tied because I get so passionate about this, it also may be really hard to then sell that property if it's got dramas going on.
That was my next question for you in terms of what this actually means, say, for an investor, right? If you have a special levy attached to your property that something has gone wrong, it would have an impact on resale.
Definitely, it would have an impact. Like I think we've gone through about 7 different real estate agents trying to sell this place, and it was like it had a curse on it. We couldn't, even though we agreed to pay for this. Thank goodness we didn't sell, because we'd have sold it at a ridiculously low price. But and we would have happily sold it at a ridiculously low price. But also, things like, can you get the special strata work done whilst the tenant is still in there, or whilst you're still living in there? For us, no one could. It was inhabitable. The roof was taken off.
Yeah.
You couldn't live in it, and that was for about 9 months, or maybe not 9, but just under 9 months. And then for other people, maybe you've got to get the tenant out. Now, is that tenant out for a month? Do you have to then pay that tenant's rent somewhere else or pay for them to stay in a hotel. What about access? That tenant may say, well, hang on, I'm being massively inconvenienced here with scaffoldings, noise, people coming and going. I want a rental reduction. So there's lots of things that you've got to sort of face, and it may devalue the price of the property, because you're not getting that yield anymore.
Interesting to see, though, that you had so many agents attached to it and so many kind of potential buyers over those years, and none wanted it. It does show that buyers are doing their research and going through this, because we've talked about the importance of, if you're buying property, to go through and check the strata reports and do all of these things and make sure that you're doing your research and assessing these things objectively. I do find it extraordinary, though, that no one kind of jumped at the opportunity when you were offering to pay the special levy, that like, okay, here we go.
Well, and thank goodness. I mean, Tom and I did try to work out what the special strata would be, and what we had in our minds, and from speaking to our lawyer about what it could be, it was not even a quarter of what we were actually eventually hit with.
Oh, wow.
So thank goodness we didn't agree to it. But it shows you how scared people are when there is a complicated strata issue going on. But obviously an experienced investor, if they'd seen that, they may have thought, oh my gosh, what an amazing opportunity to buy something at a dirt cheap price and not have to worry about ever having to fund this special strata levy. Because over time, obviously, time heals all wounds, water wounds. The building will obviously increase in value. And there are special strata levies, I should point out, that actually add value, giving the building a facelift, updating the windows, the balconies, repainting. Those are things that actually can increase the value as well and make it, more attractive.
Especially when it's not like remediation work, not trying to fix a problem, that it is actually just improving what's already there. Yeah. They are kind of two different categories almost, aren't they?
Exactly.
All right. We have spent a bit of time on special levies, but it is an important one, and it's obviously one that you have experienced. And that you say that the time heals all wounds. It does sound like that wound might still be a little bit raw.
Well, we're still paying special strata levies.
All right. Well, let's take a quick break. When we come back, we're going to go through some of the other pitfalls for property investors, things like challenges with tenants or damage that's done to property, kind of market fluctuations, interest rates, all of these things that you do need to take into account if you are considering investing in property. Don't go anywhere. Canna, today we are talking about property investing, but in particular, if you are investing in property, some of the pitfalls that you need to be aware of. This is not to discourage anybody from investing in property.
Absolutely not.
It is just making sure that, hey, we are very upfront about some of the risks and that you go into it with your eyes open. And
we're sharing things that people don't actually often share willingly.
Tenants. What happens if you get... if there's a problem with your tenants, for instance, in the property, could you be looking at things like damage done to a property, unpaid rent, for instance, which I suspect is probably quite a delicate kind of thing to have to resolve, particularly in the current kind of cost of living crisis. But these are factors that the owner of a property would have to deal with.
Yeah, they're breaches of the lease agreements. I saw a situation where the tenant was running an illegal brothel in...
What?
Yeah, in the apartment, yeah.
Well, that one to me would be more kind of clear cut. Just get out. But that's extraordinary.
But the laws are different now. They protect the tenants, and obviously there's legal costs involved, and the loss of rental income, and obviously the emotional stress. You might have insurance in place, and that's why landlord insurance can be very valuable and is highly recommended. So at the end of the day, the best way to try and mitigate that risk is to have a property manager or do your own solid screening of tenants before you agree to let them move in, and, do as much as you can to reduce that risk. Have a good line of communication with the tenant as to, what's reasonable, what's expected, and how you'll be handling problems to make sure that, they are safe, they're protected, and they can make that property their home.
You mentioned insurance. How does that work in this situation?
Well, you can take out landlord insurance, and it's not actually that expensive, and it's, for most people, it's tax deductible, but obviously always talk to, your accountant. But this can help cover any damage, for example.
Okay.
I know someone who had some tenants destroy the property, and the insurance company paid for everything to be fixed, not to improve it, but to bring it back to what it was before their tenants moved in.
And when we're talking about this kind of damage, we're not necessarily talking about malicious damage as well. These are accidental kind of things that can happen within your investment property while you're owning it. And so it does make sense to have your insurance, just as you would insure the house that you're living in, the car that you're driving. It is an asset that you are looking to insure. Another pitfall can be the time taken to get new tenants into a property, because you kind of think that in the current kind of environment with essentially a housing crisis, that it should be really fast. If one tenant finishes their lease and they move out, that it should be quick to get new people in. But really, you are probably looking at a few weeks anyway while the apartment is being shown to potential tenants, while the screening process is going on, while you're perhaps going through a cleaning process or any repairs that are being done in between.
Fresh coat of paint, new carpet.
Absolutely. You might actually be looking at a month or more without tenants in there, and that is time when you are still paying the mortgage.
Those vacancy periods are a bit of a hidden cost, and again, one that people just don't really talk about. But, a couple of weeks or even up to a month, that's a huge dent on your cash flow, because you've then got to dip into your own pocket with no income coming in or rental income coming in to help then cover that. So there are things, though, that I think you can do to help reduce that. And I should also point out, while you're paying that mortgage repayment, you've still got to pay the council rates and the strata levies and all those other things on top of.
Yeah.
But what I would say to people is, if in this situation, is try and avoid tenants, if you can, moving out during periods like Christmas time.
Oh, yeah, because no one's going to want to move in or be attending inspections on kind of Boxing Day.
Exactly. So if you can have an open, frank conversation and say, look, can we work with you, even if it means slightly reducing rent, to avoid them moving out at such a crucial time, that can really help reduce that gap. And, I've seen situations where tenants have asked for a rental reduction whilst the open inspection period goes on. So they'll say, look, I'm going to be moving interstate, I'm going to vacate this property. And the landlord said, okay, well, if you would let us do an open inspection, say 5 weeks before you move out, we'll reduce your rent accordingly, give you a certain discount, just to help bridge that gap and help make that in-between period much smaller.
Funnily enough, it's coming back to a common theme that we've talked about, and that is communication. Yeah. Right? And whether that is directly with your tenant, if you have that relationship, a direct kind of landlord-tenant relationship, or through your property manager, kind of observing all the rules and everything that are in place around it. But communication really helps. And as a tenant, I know, speaking from past experience, you appreciate good communication and open, honest communication about what is going to happen with the property.
Exactly. And other little hack is always have some good quality photographs of the apartment or property, I should say. It's massive assumption of the property, inside and out. So the moment, someone says, okay, we're moving out, you've actually got something at least that can go up online and to engage the interest and the bites as to whether you'll be able to move this property into another tenant quickly.
That's a great tip.
I thank you. Very experienced in this area.
that's
a lot of stressful situations to try and avoid myself.
I'm going to bundle a few things into one question now. Market fluctuations, interest rates, over-leveraging themselves. How does a property investor prepare for all of those? I've got 30 seconds to answer it or something.
All right, budgeting and cash flow, obviously number one. You've got to run your numbers actually before you buy anything like this and go, okay, and I've always said this, can you afford a 3% interest rate rise? Not 3 interest rate rises, a 3% interest rate rise. If you had followed that advice, which I've been saying ever since I've launched Sugar Mama TV, which was 10 years ago, that would have allowed you to see exactly how much stress can you take on before it actually buckles. So be realistic as to the fact interest rates can go down, but they can also go up, and as we've seen, they can go up consistently and in not just quarterly increases, 25 basis points, but obviously 50 basis points as well at a time. So do a stress test beforehand, and also review your finances as well, so that if you've got multiple properties with different loans, you can see how each of them manage. Also look at things like the impact, obviously, of someone moving out. If you have overextended yourself and the rental market has softened and you're not getting the returns, you've got to speak to a mortgage broker, a good quality experienced mortgage broker who deals with this all the time and can look at tweaking and changing your existing loan strategy, or if necessary, refinancing with another institution or lender so they can maybe get you a lower interest rate, or perhaps they can change your terms from interest only to maybe principal and interest, because it'll bring the interest rate loan down. So and it obviously is subject to what's going on in the market and what's a competitive rate, but you've got to work with people and people who are experts when things go wrong. So it also obviously no-brainer talking to your accountant as well, making sure that you're claiming all the deductions that you can. Speaking with a property manager can help make sure the whole process is managed more smoothly, understand what your legal entitlements are with rental increases and so forth.
Because you do worry about people that have borrowed to their absolute maximum in order to invest in a property. And again, it's kind of like the mistaken belief that when you borrow money, when rates are low, that they will stay low forever. And it doesn't happen. And just the same as thinking that the high rental rates and the yields that are available now, that they will continue forever. And sure, they may remain elevated for some time, but markets can go both up and down. And so you need to be prepared for perhaps the rent on your property to fall.
Exactly.
There is a lot in that one. You mentioned an accountant then, just in passing, to make sure that you are claiming the deductions to which you are entitled as part of this. That is then linked to another property pitfall, which is not understanding the tax implications of property investing. For instance, everyone talks about negative gearing, and it is a really big political issue as well. Kind of whenever it is frequently in the headlines. But if you asked some property investors, can you define negative gearing for me and how exactly it works and how it affects your income and your tax that you pay at the end of the year, they may struggle to do it. Like, it is about actually understanding the tax implications of your investment.
Absolutely. You need to understand not just negative gearing, but also all the other taxes along the way and what you can legally claim and what you can't.
Yeah. Capital gains tax as well. These are things that you should have a conversation with your accountant
and a
about.
Proactive conversation. Don't go and sell the property, then book the appointment to see your accountant. That could be disastrous. Go and see your accountant saying, I'm thinking of selling this. What are my tax implications? And they can run some numbers and scenarios for you where they can help reduce that tax legally.
And would you recommend having a conversation, you're talking about proactive conversations, about even before you are buying as well, just to go, okay, this is what I want to do. I want to take advantage, say, of negative gearing. Is it actually going to make any difference to me if I do this? Is this going to actually be a good decision?
Yes, your accountant, but also your financial planner as well.
Yep.
Because your financial planner might say, hang on, ease up. We actually need to pay attention to your superannuation here because there's greater tax savings for you by using a superannuation vehicle. Or perhaps we need to look at buying a property, but buying it through a self-managed super fund.
Yeah. Okay.
So, there's lots of things, stones to unturn before you make any big decisions.
I like that place to finish up. Proactive conversations. Actually getting in there, talking to your financial planner, talking to your accountant about the tax implications and about the right strategies for it, because really that will then help you kind of prepare. If you're having those conversations with your financial planner, that'll prepare you for the other pitfall that we were talking about, market fluctuations and interest rate rises and perhaps potential drops in kind of rental yields and things. If you have those proactive conversations, then you are more likely to be prepared for all of those things, right?
Absolutely. And can I say one last thing?
Oh, yes.
Have a strategy. So many people.
It's a great idea.
But so many people go and buy a property and they're like, great, I bought a property, I bought an investment property. But if you ask them, okay, well, what's the plan? Oh, I don't know, I'm just going to rent it out. All right, okay, how's that going to work? So is it the plan to have it paid itself off over time, or is the plan on it to build up the equity within it and then buy another one? Or is the plan to actually flip it and buy, crystallize that gain and then buy a bigger property? Or, what is the actual strategy behind it? We can all very easily get caught up in that herd mentality and that property is the be-all and end-all, to build wealth. What's your game plan? And everyone is different with what they need, and this is why you need personal advice. Yeah,
absolutely. All right, well, we started with kind of special levies and understanding the implications of those and making sure that you are saving and preparing just in case one of those does actually hit the property that you are investing in. We've talked about tenants. unpaid rent, the time it can take to get new tenants into a property, bunch of strategies there, dealing with market fluctuations, interest rate rises, drops in rents, and understanding the tax implications. We've covered a lot, and we've made it probably sound like there are a lot of potential pitfalls for property investing, and there are, but there's also a lot of benefits to it as well. But you just need to go into this kind of thing with your eyes open.
Exactly.
Canna, if we want more information from you, where do we find you?
If there are any lawyers listening to this going, they might have a case, please feel free to reach out to me at Sugar Mama TV and Canna Capital Official.
And you can hear me every day with Sean Aylmer on Fear and Greed Daily Business News for people who make their own decisions. Thank you very much for listening to How Do They Afford That? Remember, please, to hit follow on the podcast. And the best thing that you can do is tell somebody else, send them the link to this episode if you think that they might benefit from hearing it. Spread the word about How Do They Afford That? Thank you for your company. Join us again next week.